Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Looking at DRYS on the daily and weekly time frame, and I admittedly have been very bearish DRYS. Obviously, if you look at this chart in the past 2 months, anybody trying to play this name bullish is trying to swim against a raging river in the wrong direction. We have not seen 2 green days in a row until this bounce started playing out this week. But time and time again, if you're looking to play bullish, I'm going to say stay well away from this name. But that's changing, and it's changing just for a short-term trade opportunity. So what I see playing out recently is huge bull volume and a bounce playing out. Now, I don't know the situation specifically of the financials, but looking at this chart, I know that there's probably significant convertible debt. I know there's probably significant dilution going on, and the price is obviously getting crushed. So it looks like we're seeing some relief from that. And we saw an oversold bounce play out, a gap up open, and a run, and that's where the difference came in because we've had multiple gap up opens and then profit taking on that gap up. So we had a gap up and a run, then we had another gap up, and then there's your profit taking stepping in. So why do I like DRYS for a short-term trading opportunity next week? Because after this bull break, we are consolidating and it's in a very contained, healthy manner. The volume is dropping off significantly. It's a higher low is looking to form. The low of the past 2 days is 390 and 385. And we have an inside candlestick today with that tight range. A break of 450 on Monday will be bullish, and a break of 385 will be bearish. So the setup that I would be watching heading into Monday is I would have up the chart, and I would be watching to see if we can get a break of 450 first thing. I might be making a bullish entry before we get that bull break, and bullish entries are made either off of key support holds or key resistant breaks. So if we see the price drop down to the low $4 range, you could potentially make a bullish entry. Let's say you want to make an entry at 401. You have 1,000 shares, you get in, and your stop loss is just below 385, the lowest price we've seen on consolidation. What that means is if we see a break of that support and indicates that we're heading down for further downside, you're going to get stopped out and lose about $170 when it's all said and done. If you can accept that risk, then that's the kind of trade that you're going to be looking to make. If you would rather wait for the bulls to prove themselves, you're waiting for a break of 450, and then you're making an entry as we look at resistance of $480, $5, and then $638 is the highest price we've seen. So I do believe that we're going to see a short-term bounce early next week. And the question is going to be, is it going to have enough volume to continue higher to break 638 and see higher highs? Or is it going to reach an equilibrium? And an equilibrium pattern is when you have the bounce, the low of consolidation, and then a lower high, and the range continues to tighten. So if we don't have the bull volume to give us a bull break of 638, we can expect a short-term bounce, maybe a move into the mid $5 range, the low $5 range before stalling out. So that's where volume comes into play. That's going to let you know if the bulls have the power to continue to higher highs or if it's going to putter out and we're not going to be able to get that higher high. The weekly time frame is a bullish reversal candlestick on huge volume. Oftentimes volume climaxes signal the top of an uptrend or the bottom of the downtrend in this case. So that is potentially possible. 360 million shares traded when the highest that we had seen before the past 2 weeks was 91 million, 23 million, and this volume is coming out of nowhere. So huge volume at the lows. The question is going to be how much dilution is there waiting? And I personally don't have the time to take the couple hours needed to dig through the financials and get that information. So I would just be looking to make a short-term bull trade, stop loss either at 385 or wherever you are comfortable risking, and seeing if we can get some further upside early next week. So this is a high risk, high reward trade, and certainly want to have experience in penny stocks and fast movers if you're going to be trying to make this play. But we'll see how it plays out. I will be watching it early this week. I know we have some members that are liking high volatility names better, bigger gains, bigger risk. So we'll be all over it, and we'll check back in if this does play out nicely for the bulls. And I hope you have a great weekend. Thanks for watching.